So good morning and thank you. I think, based on the first quarter results, a strong set of financial results, it gives us really good foundation for the future. It shows that we have focused on the priorities we said we would, and we're starting to deliver on them. The EBITDA growth of over 25%, I think is a good indication. But beneath that, in terms of our growth plans, we're seeing over 30% gross margin growth in our convenience business. And that shows that what we're offering our customers and delivering is very strong. I think that's really good for our business, but also it allows us, in terms of our financials, to invest. We're investing heavily in our technology. We're investing in the customer experience. We've just opened a Giant store, a partnership with Giant in our convenience store. We talked about delivering 3 new stations in Dubai this year, and we're on track to deliver that. So I think the financials in terms of delivering strong EBITDA and net profit growth, in terms of efficiency around not just our operating expense, but our capital expense as well, allows us to develop that growth, investing over 100 million dirham within our technology at our stations to improve the customer experience. I think it's a great foundation for that growth.
So you're talking about improving the customer experience, but where else are you looking to grow outside of the UAE?
So outside the UAE, we've just got a license within Saudi, and we're working and talking to our partners within Saudi. Within the UAE, we're not in Dubai, we're growing that. But I think also within our products, we have a great lubricants and LPG business. We have a strong convenience business that now gives us that foundation to grow.
And talk to me a little bit, John, here. Obviously, in Saudi Arabia, there's a lot of excitement in the coming months. Women will be driving in Saudi Arabia, a big change for that country. In terms of that customer experience, are you guys focusing anywhere in terms of what you want to do to make that a more smooth transition, potentially?
Yes, but I think it's by doing it first within the UAE, really building on that. So I think the progress we've made in giving our customers choice around our fuel business, giving customer better choice in the convenience, that gives us that foundation to be able to grow outside the region as well. I think fundamentally, though, we need to make sure we deliver on those priorities in the short term and improve the efficiency of our business so that we have the access to capital and operation expense to grow.
And in terms of what this move by ADNOC Distribution means more, bigly, when you look at what happens with ADNOC next in terms of the growth of the company and in terms of their place within the broader strategy here in the UAE in terms of moving forward and, focusing away from these non-oil revenues, what's your role in that?
So I think ADNOC has a very clear strategy to do that. I think where it impacts and supports us is developing and growing the region. $45 billion of investment across Abu Dhabi will have a significant impact on our business in terms of volume growth, in terms of margin growth, etc. So I think from that perspective, we gain and we succeed through the investment, not just of ADNOC, but across the UAE region. And I think it's very good for the UAE region and the volume and margin growth opportunities in the future. I think our job is very clear within ADNOC. Deliver on the promises we made to our investors. We have brought in foreign investment into the region, building that credibility, building that position, delivering the results like we have done in the first quarter, I think is very clearly our role.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.